Now let's switch our attention to Asia and talk about a company called AIA. Okay, so this one is Hong Kong headquartered and has operations principally in that market as well as in Singapore, but it has interesting history. It spun off itself from AIG in 2009. AIG, of course, is the big US-based insurer that is one of the world's largest. In fact, though, you could argue that AIG spun off from it because it was founded by a guy called Starr, his surname Starr, S-T-A-R-R, in 1919 in Shanghai. But then it turned out Mr. Starr decided to move his operations to New York. So for a while it was a consolidated entity, but then in fact it emerged as its own in 2009, listed on the market in Hong Kong. And it is really now the principal player out there. It's got a very big and established business, and its market capitalization, you either can measure it in Hong Kong dollars on the market, the Hang Seng, or you can consider the ADR, which is listed in New York. That gives it a market cap of $77.44 billion. So also a pretty sizable and handsome sized player. Really selling insurance and saving products into the wealthy Asian populations around the region. Price to earnings ratio 28.97, dividend yield of 2.06%. And interestingly, they are one of Discovery's partners with that Vitality thing.
Yeah. Look, different to the previous company that we spoke about. This is not just a healthcare provider, it is a life insurer. It takes on risk.
Right.
So when you start looking at this company, you hear all of these terms that a lot of people don't understand. Value, new business,
so you can tell us.
Embedded value, present value of future, etc., etc. So their main business is actually risk, i.e. underwriting if you die, if you get disabled. Life risk.
And short-term, and all the other stuff.
Everything, and of course health risk. So it's not really a...
So in some ways they're very similar to the way life insurers operate here, where they have a healthcare division, but it's really a...
It actually is far more like a South African health insurer than that. But they've done extremely well. I mean, there's a very good reason why they were spun out of AIG. Because AIG would have sucked them dry of any capital, because AIG was one of the big problems.
Just before they were about to list on the Hong Kong market in 2010, Prudential of the UK tried to zoom in and buy them.
I don't see why they...
And failed. I don't know, they couldn't quite do the deal, and then they went ahead with the listing. At that time, it was like the third largest fundraising in an IPO in the world.
They've done spectacularly well. And they've been in a relatively good region to do well.
Yes.
Because despite the fact that Chinese growth might have fallen, it's still growing at 6%. So the whole area, there is actually positive growth year in, year out.
And my understanding, which might not be 100% correct, is that they're not really a big player in the Chinese market compared to Ping An and all of those people. They are there, but the main market is Hong Kong, Malaysia, it's Indonesia, also in Australia, it's the Philippines, and it's Singapore, which is a very big market for them as well.
So they've done extremely well when you look at their value of new business. Now, what value of new business is? When a person gives you money as a life assurer, you calculate all of your expenses, what is going to cost you for the benefits, and in that calculation is a profit for you. So when a person starts out and signs the policy and starts paying you premium, you present value, today's value of your future profits. And it's not, you don't show that in your income statement, but it's an idea of what kind of business you're writing. So it's a very good idea of what's going to happen to future actual profits. And this was very, very
high. The metric for them looks good. It's actually quite fun to go to their website and to see all that Vitality stuff, because you know what, it's all the same. It's all the same stuff about get your points and what's your,
that's when we
your AIA age. I thought that was quite amusing. You know, where you put it in and the thing says to you you're 45 when you're really 49, and then you feel good. Tells you you're 55 or whatever.
We'll discuss that when we come to Discovery. But this is a very good company in a good market. They seem to have
another thing I noticed looking at their corporate profile is that they've in recent times done quite a few acquisitions where they've, for example, bought the Asian business of ING or bought the Asian business of Aviva. So European insurers who think, you know what, the Asian thing, we know what's going on out there.
They know the market at least.
Exactly.
They know the market well.
They know where they want to be.
And certainly their new business margin, which is a critical thing in establishing whether you're writing good business or not, is actually up from 50% to 52%. Now, first of all, that's a big increase. And secondly, that's a very, very high margin.
Right, we're running out of time. So quickly show us the share chart here of AIA, which is the US-listed ADR. You'll see that it's sort of drifted a little bit at the end there. It's had a little bit of ups and downs. But Wayne, how are you feeling about this one?
I'm quite happy with this one.
You like this one too, compared to what we see here, similar kind of business model. So we'll go hot on that one.